But for that, well, let's move on then and let's welcome Amit Gupta, fund manager of ICICI Securities PMS, who joins us on the show. Hi, Amit. Good afternoon. Thanks so much for joining in. Amit, what's the strategy right now? Valuations are a little bit lofty. Normally, as a trend, I think you'll maintain close to around maximum of 20%, 0 to 20% of cash. Have you all raised some cash in the recent past? Could you tell us what is the updated number?
So exactly not actually. So what we have done in this particular move when the market has slipped. So now we are doing some kind of rebalancing, and we are buying some more stocks now wherever we believe there is more growth actually is going to come. So I think it's more stock picking market now. You are seeing certain sectors rotations here and there. But my sense is there are two broad things which were negative to us. One was the dollar, which was continuously rising. And then there was a crude oil actually, which was sticky. Now we have seen both of them actually have come down. So those two risks, have come off. And that is where I think the markets can find some, consolation here. It is possible, more consolidation possible around 18,000 levels. I think one of the reasons technically here is that the premiums, if you look at the Nifty future premiums right now, they were very steep. Generally, we have seen that whenever you see 100, 150 rupees of premiums in the markets, I think some consolidation actually definitely happens. And that is what we are seeing right now. So what was happening around 17,000, I think that may happen around 18,000 now. And this is where the declines like this, I think, is an opportunity where you can buy something in your portfolios.
Can you tell us the rebalancing that you're recommending and doing to your own portfolio? What are the stocks that you are betting on, and which are the stocks that you are avoiding?
So I think, if you look at the H1 financial year 23, because when the commodity prices were higher, we saw the government expenditure towards, roads and all was little lower. So the total target for financial year 23 was 5,000 kilometer of road construction. But finally, it happened till November around 2075 kilometers. So our sense is whether when the market is moving towards financial year 23 closing, you will see more awarding of projects by NHAI, and eventually this construction activity is going to elongate till financial year 24 because your elections are there, and before that I think this activity will pick up definitely. So we are going more overboard, you can say, in the capital goods space in this particular decline. So L&T we have bought more, and I think this particular stock, if you see the last few days also, continuously the news flows are coming that they are selling the non-core assets. So they have sold, they are looking to sell IDPL, and where I think 1350 crores something, can be garnered. And also they are going forward, if you see, they are going to do this Hyderabad metro, project partial stake sale. And then they will, go with some other stake sale like Nava power plant. So ultimately what's happening in the company, which has already done some Snyder E&A kind of, non-core asset sell-off before. Eventually, this company, working capital to sales is declining. They are getting more efficient. So it was 24% working capital to sales when I look back 1 year or 1.5 years before, and now it has come down to 20%. They are targeting to reduce the debt from 40,000 crores to now 23,000 crores, and that is where these non-core asset selling is happening. So my sense is whether you look at defense, whether you look at space, whether you look at the Middle East orders, which are actually have increased, I think this company may not have too much of downside now left. It was more sticky in the last 3 years when it was more consolidating, but now the time, this is what we believe has come when the performance will start coming in. So we have added more in our portfolio, ACE equity portfolio, L&T positions.
This will be, Amit, hi, good afternoon. One of the few years when Bajaj Finance, if it ends like this, will be down for the year, right? Are you adding more? What's your view here? Bajaj Finance, you own it.
We own it, but we are not adding more. I think you rightly said 1 year has gone off, but some of the consumer, conglomerates, you can say, or the companies which were the top tier companies in consumer space, whether in the finance or whether in some other verticals, they have not been able to perform because very clearly consumer on a mass scale is not performing. The inflation is higher. We are seeing the rural area in distress when we look at the commentary from HUL and all. And despite the fact that the crop cultivation and harvesting is happening fine, so this Rabi crop, cultivation has also gone good, and the water reservoir levels are almost at 10-year highs. But still, the inflation is pinching, and we have not seen that across the board consumer buying is happening. It is very, very selective segments, and that is where Bajaj Finance also has gone into some consolidation. But
right.
I think what the management is projecting is very, very encouraging. They are saying that from the current almost 2 lakh crores of AUM book, this may be doubled by financial year 25. Their NNPAs have declined significantly to almost 0.5%. The valuations around 7.5 when we look at, so above 8,000 kind of levels are coming in the stock. But I think this premium valuation will remain intact because the fintech valuation, whatever you say, which is given to the company, and on the top of it, the digital footprint. And I think now moving into the area where the more harvesting of Rabi crop is going to happen going forward in the 1 quarter or so. My sense is that the consumer financing space can pick up more now. And that is where I think it is possible the stock eventually can start performing from here.
All right, Amit, tell us a couple of stocks that you have added in the last 2 months. We have your top holdings, which should come up for you in the screen, and most of them are large cap names. Could you tell us, which is any new stock that you have added into your portfolio, or any stock which will have substantially increased weightage?
So I think the stock which was in the news today, I mean, for example, Maruti. So from the auto space, we have started buying Maruti in the portfolio. Now, you can say that there is a short-term volatility which can be created when yen is appreciating. But overall, look at the last quarter when yen depreciated against rupee because the royalty payment has to be done in yen to the promoters. We saw that it was around a benefit of 158 crores, which was 0.5% of sales. So up to that extent, some impact may be there, but eventually the growth path looks more visible now, which was not happening before. Previously, we saw the peers, they were coming with more UV launches, but now Maruti is also going to come. In fact, Grand Vitara has got a very good response. The hybrid models also are getting good response. In CNG, they have more than 20% of sales volume, which is continuously picking up. And from here, I think the margins also are going to improve. So steel prices and commodity prices, which are down, you have seen in financial year 21, I think 6.5% of margins, and now it is coming in double digit. So I think that is going to give a positive vibe to the stock when the valuations are compelling. So you look at the 5-year average valuations of Maruti, it was above 50. And now it is somewhere around 24. So I think looking at the market leader and the auto cycle where, at least the order book is there. You look at the order backlog, it can go to one year also or 2 years also in some of the companies. So at least in Maruti also, you have 2.5 to 3 months of sales. That kind of visibility is there in the order book, which is going to increase more with the launches till financial year 24 ending, which has just picked up. So my sense is this stock is at a good level from the valuation perspective. Short-term volatility is an opportunity to buy more.
No, that's Maruti and Amit's view there. By the way, there's one thing which is common between yesterday and today's session.